Ladies and gentlemen, welcome to Insurance Town. I'm the Mayor Heath Sheeran and the host of this podcast. I'm so happy you're here hanging out with me today because I got a friend coming in hanging out with me, Jeff Kleid, and I'm pumped. I met him in Santa Monica at the IB Future Fest, and we had such a great conversation, and I've been waiting to get this one released, so I'm pumped you're getting to hear this one. This one is sponsored by my friends over at Smart Choice, the fastest growing agency network, hands down. 10,000 agencies, $11 billion in premium. They have, no startup fees, no monthly fees. They just are wonderful to work with, whether you need a couple of markets or a whole slew of markets. Hook them up, give them a shout. smartchoiceagents.com. Go check it out. Tell them the mayor sent you. Also, my friends over at Canopy Connect, go to usecanopy.com/Heath and get your demo, get your discount. Make sure you let them know that I sent you, and you can make sure you get that discount. And they love the show. They've been supporting me for so long, and they just they want to take care of you. They got intake forms. They've got deck pages. They got loss runs. You name it. They can hook you up, and they can make you a much better agency for having them a part of your program, part of your tech stack, you name it. Go to usecanopy.com/Heath and check it out. Guys, I am going to slide out of the way. If you can check out this conversation with my man, Jeff. Jeff, what's going on, my brother?
Not much. It's awesome. Good to see you, Heath.
Yeah, dude, for sure. Long time coming, man. I'm glad to see you. How you been?
Yeah, I've been good. I've been busy. I've been trying to get through summer, having a ball, living summer. I always live summer like it's summer, and having a son home from school was the same thing. I had a great time hanging out with him, and I think we went to a lot of games, did a lot of goofing off, and then I drove him back 17 hours up to Oregon. So,
God, is that a tough drive home for you after you drop him off? Or are you like, oh, thank God I get a reprieve?
No. So I actually drove him up there with a car that's been sitting here for a couple of years. So I drove him he's a junior now, and I intentionally didn't want him to bring a car up there for a couple of years. And then I was going to sell the car. And then I'm like, you know what? This is stupid. Like, you're always begging people for cars. So we drove up. It really is. It's easy. Like, it's mentally easy. He's my youngest, so I have another one who's 27, so he's out in the world. And interestingly, he might be at ITC. We'll see. I have. Yeah, I think with FaceTime and all that other stuff, like, you don't. Yeah. It's not the same as when we were kids. Like, when you didn't see your parents play.
I've got a senior this year, and I'm already struggling with the idea of him going off. He's my oldest, and so I'm just struggling with it. I got, my wife's like, "Are you crying already? We have a long way to go. School just started," and I'm like, it's gonna be tough, dude. He's my only boy, and it's just been tough, man. And he's already, planning out college and talking about can't wait to leave and go into. I'm like, no, don't leave me yet. But no, I get it. So
yeah. It's funny. My wife, it's probably the same as your wife. Like, she doesn't, like, I cry. I'm like, no, I'm sad. But you know what? When my oldest son went to college, I was like, I kind of came to terms with it. I'm like, yeah, he's going to college. He's not going to be home the same way. He's not going to be doing the same thing. Now, the other side of that, he was a senior in college when COVID hit. So he was home for 9 months. Because I told him, I said, look, you can stay up at school. Nobody's going to be there. And I don't care what people are saying. I'm hearing things differently, and I'm not coming to get you for a year. Like, I was very clear with him. I understand what's going on in the world, but your mom just got over cancer. We're moving on. We're locking down. And I've been dealing with Europe on insurance for years. And I'm like, it's different than we're hearing here. And I said, you're coming home. So I drove up there in the middle of the night, didn't even let him stop to pee. I made him go on the side of the road.
That's hilarious. Hey, you got to, man. Mask up and go on the side of the road. Yeah. That's funny.
Yeah. That's what happens when you're a West Coaster, right? It's different.
Yeah, there you go. It's a little different. You see that on the side of the road every day in Arkansas, so it's not a big deal, man. We have people peeing on the side of the road. That's just normal happenstance. If a bathroom's full at our house, me and my son are outside, using the bathroom in the yard. But
yeah, that's funny.
That's just a redneck way. So tell the audience, like, let's take a walk down memory lane and tell me a little bit about Jeff and, like, where you've been, and walk me up to where you are now. Give me a good 5 or 6 minutes of where you've been and what you've been up to.
Man, all right. I mean, look, I started as a retail insurance broker going back to the mid '90s. I've been in the business literally 30 years this year, and literally just a producer. You sell a policy, you get paid. You literally don't sell a policy, you don't eat. You figure it out. And I was fortunate. I went to go work for my father-in-law, so I did get a draw. I got like a $300 draw, and then I think I got a little bit more as I was doing more for the agency in addition to me trying to make money. Did that for a bunch of years. Ultimately, put on a really good book of business. Just a very diverse, very hard to place book of business. I became fascinated in the late '90s with the internet. So 1996, I started selling insurance on the internet, believe it or not, and was
incredible.
big. Yeah, no, it was funny. I used to get made fun of by everybody. They're like, hey, "How's that little thing with that interweb thing? And how are you doing?" And I started selling. Actually, started selling cyber liability back then, before when it was called internet liability. And so did that for years, and then got into produce, got into food distribution, and then the late '90s, early 2000s started getting into film and TV because I live Southern California. I lived above Los Angeles, and so I started running into these weird risks that had nothing to do with, like, they were just weird risks. They were like everything from someone wanted to insure a construction manager, and I don't know if you know what that is, but it's basically not a contractor, and it's not it's not an artisan, and it's not a general contractor. It's someone that watches the project. That's all they do, and so you have to figure out how you get insurance for that. So it's hard to get, and I'd be like, why are they doing this? And they're like, well, these guys made a deal because they're building something no one wants, and they said the only way you can build it is if you have this guy sit there, and the only way you can do it is to get insurance, and nobody wanted to do insurance because there was no receipts on it. Right? So there's no way to quantify the audit and stuff. So I started getting stuff like that. And then before you know it, I started doing so many of that weird stuff. I'm like, wait a minute. Why am I not getting the rest of this stuff? Why can't I get in entertainment? So I got in entertainment. Ultimately became president of my agency about 7 years in. I mean, I can't say it wasn't because I was son-in-law. I can say it was because I took the helm when it was needed, and then I became president, and we built it from about 11 people to 80 under my watch. And so we had an opportunity to grow in every direction. Left after 14 years, bought a book of business, built a new book of business, and then got lazy. I actually got into the Mark Zuckerberg phase, and I started wearing a hoodie and selling insurance on the internet in about 2009. And I ended up selling about 20,000 policies on the internet before people were paying attention through a couple of associations. And then rode that for a while, and then had to re-up and kind of figure out how to do more stuff because the kids got more expensive, and had to start putting on clothes again. And then ended up selling my second company, my second agency, to a division of K&K, a division of Aon called K&K, if you know who they are. And I sold them about the several thousand policies that we had, and then I waited a few years. In 2018, I decided I didn't want to be a retailer. I wanted to be an MGA or a wholesaler, which I don't know if you know this, but well, first of all, you know this because you're in the insurtech world, but everybody calls himself an MGA. Everyone calls themselves, an insurance company. You're like, oh, well, how much paper do you have? Oh, we don't have paper. We're an insurance company. So it always cracks me up. And then I got introduced to the captive space, and I realized I could have been using captive insurance companies to help as an MGA. So in 2018, I actually bought a cannabis insurance agency to learn what that industry was like, and very quickly found that hemp was the right play to be in for cannabis, even though the cannabis people were like, you're crazy. No one's going to buy hemp. And it's funny because they just announced like a few days ago that hemp's going to be federally legal. So it's kind of funny. Not just federally legal, but actually promoted for seniors. So it's kind of funny. But yeah, so I started doing that. And I started doing crop insurance parametrically, and then just got busy. And then next thing you know, COVID hit. We had to pivot because the world stopped. And we used the same techniques we were using for the hemp crop insurance for parametrics, and we created a COVID policy for film and TV. and then ventured into trucking and professional liability, nursing homes, you name it. And that's what we've been doing for about 6 years now, or 5+ years now. So it's kind of where I am now. And so I'm a MGA, MGU, have my own paper, have a pool behind us, and we help, both insurtechs and traditional, brokers bring us large one-off risks that the client wants to take risk. And that's kind of where we are. Like we morphed. I'm a specialty and hard to place insurance guy. Like that's it. There's nothing else. It's just I look for the stuff no one wants.
Now is helping more of on the agency side, like retail agents to place that business, or are you more helping carriers, or are you kind of in the middle there somewhere, or you said insurtech as well?
Yeah, so we're actually a carrier. So we actually have our own paper, take our own risk. But we also facilitate alongside of other carriers, and we work. A broker will bring us a risk and say, I've got a client that's paying $1 million, and they want to take 75% of the risk, or they want to take 25% of the risk, and we'll take risk alongside of them. So we'll take the balance. We'll take as much as they want us to take, and then if they need rated paper, then we have to go. Find fronted paper, which is not easy to do for one-offs. So we don't put a lot of focus on that, but we have had people come to us and say, oh, we have fronted paper, we just don't have reinsurance. And so we're like, all right, we'll be the reinsurance, and we'll sit behind you. Or if it's a member-based program or something like that doesn't necessarily need rated paper, we'll create a program for them. So we sit behind, for example, a phone warranty company. They started out as a member-based, benefit, and we don't get to handle the warranty service side of it anymore because they needed a contract. But we absolutely backed them from day one, and they went from 400 policies to a month to probably 40 or 50,000 a month over the last 4 years. So it's
when I talk to agents, and because right now 30 years, and I've been in it over 20 years now, I've seen several different market cycles. Whether you want to call this a hard market or whatever, the new norm market, whatever you want to call it, but there's still agencies that when you start thinking about captives or specialty programs or putting together anything hard to place, people still have this like fear, of wanting to do something like that, or they don't know how. And a lot of people, again, it's just kind of that paralysis thing. Like, I don't know what I'm doing, so I'm just not going to do it. I'll just stick to traditional ways of doing insurance. But for someone like that is listening, it's like, man, I've got to do something different, or I want to get into this space, or, maybe hard to place is for me, or maybe this particular program will be good for me. Are they right? Is it really difficult to do? And should they just stay in the paralytic state? Or is it something like, call Jeff and he could help you do it? Like, what do you think that, why, first of all, do you see the same thing I am, that people are still like, have this step back, like, I don't know what to do. I don't know how to approach that, so I'll just stick with
yeah, and sorry to interrupt.
No,
my head's like, you're not wrong, but let's take it back a bunch of years and even go back to your 20-year, okay, not 30-year, but 20-year. Because I wasn't me before 20 years ago. It took me that long to get to where my mind was totally different on how I sold things and how I did things and how I respond and react. First of all, think about this. In most places, most retail brokers are taught non-admitted paper, surplus paper is bad, right? They spend their whole basis of their life knowing that. And I was taught day one, minute one. It's in mid 1990s. It's more flexible. It's more creative. It allows you to do things. It allows you to be up and running. They can give you a quote in minutes. They don't have to go through the thing. And oh, by the way, most every non-admitted paper I worked with paid the claim. Didn't default. Didn't go out of business. So that's the misnomer that starts going back all those years ago, right? And so today, most people, anyone that's been in the business less than 10 years. If they're in a mom and pop localized agency, closely held company, it's not always about the ROI. It's about making commission and making money and feeding your family, right? But more and more have been forced into the big places, where the big places, it's about control. They can't control. They're not going to get paid like what we do. Not too many people do what we do, or work the way we work. And it's not because they can't. It's because there's not enough money in it for them. They're not going to benefit too well. And they don't really control the client, right? Because we're literally telling a client when we take them on, we'll take as much risk or as little risk as you want. We'll help you as long as you want. If you want to become 100% in control of your insurance program, we have a partner captive manager over here that can help you, or we have other captive managers that come to us with the risk and they will help you. And so we're only going to get a fee for facilitating that. So like, we're already telling them, we know that we're not going to be a 40X company. That's the difference. And so I think that's the problem. I think you're definitely going to see, and by the way, that when you take people's money, even in the phone warranty guys that I deal with, they're going into Series B or IPO or sale or something. That's the next phase. They've taken Series A. They're doing what they're doing. Since day one, minute one, the VCs have been in their head. You got to do this. You got to do this. None of it was about insurance. None of it. So like, I'm the voice of reason when it comes to insurance. I'm like this. And even now, when they tell me things over the last couple of years, I'm like, yeah, I told you that 2 years ago. I'm like, yeah, of course you should be doing that. But the money wants them to follow the money and get the numbers and do what they do. And so I think we're seeing a change in that. I think revenue is starting to become more important. And I think that you need captives. First of all, if you do your own research, captive insurance companies make up half of the insurance value in the country. So literally almost half of the value of, whatever the total value of insurance companies are in this country, almost half is from insurance captives. So there's captives reinsuring the other things. It depends on how people are perceiving what that captive does. A lot of people perceive a captive as, and they have for years, they're like, oh, that doesn't help us because it doesn't have AM Best, it doesn't have this, it doesn't have that. And they're right. We would like to get AM Best. We would like to get fronting. And that, I forget what it's called, that problem that happened with the guys with that $3 billion line of credit that caused the problem a few years ago. I forget what it's called. That blew out all these startup companies that had all this money, right? It blew out every single, AM Best rated company.
Yeah.
So, yeah.
It's just, like I said, and again, a lot of people, when they think captive, their brains go to a different direction than you are. Some people, think captive is, they'll think of like these exclusive, like Farmers or State Farm or things like that. But you're talking about captive in a different way. And I think it's just a language difference in some of that. But then also, I think people just think, like you said earlier, like when I first came in, early 2000s, I went to work for a company that just, all we did, we were a brokerage that did hard to place workers' comp. And we had a special program with, Aon and with, not Aon, AIG, to just seriously like 1+ mod accounts that were just terrible. Like nobody wanted, sometimes we'd see 2 point, like just bad mods, and people just didn't want them. And even back then, I can remember people like, they looked at me like I had 3 heads. Like I had the plague. Like nobody wanted to talk to me when I would come in, I'd talk to retail brokers and be like, hey, if you've got any of this, like, we don't want that. We don't want to touch any of that, and it's like, are you kidding me? Like, these could be massive accounts. Yes, the premium's large, but the payout may be a little smaller. But when you start writing in that large a clip, and once you get some of those harder to place accounts, they're going to stay with you as long as you treat them right. It's just because they know they're a hard to place account. And so,
well,
go ahead.
Yeah, well, no. So I'll jump on that. So we sit behind one Demotech rated A-rated paper that's admitted in multiple states. We sit behind them for trucking, excess trucking, personal auto, as you know, because you met one of the guys I sit behind, and we sit behind a lot of that stuff. That same market has been doing workers' comp for years, and what they want right now, they want 1+2 mods. And they want, and this is how we do it. So we go and partner with our partners that do captives, and we make the client take the first layer of $250, $500, or $1 million in that thing. And even if statutorily they can't do that, because certain states you have minimums, you have things like that, they can still become a reinsurer, right? So they can still, they're captive. So when I'm using the term captive insurance, I'm talking about privately controlled, private captive insurance companies, right? Not State Farms, all states, American Family, things like that. But
Right.
so, like for example, we presented. We had one that was, I think it was a 1.40, 1.4 mod, and it was like $1.7 million. They were going to put up $500,000, and they had to monthly. They weren't doing it quarterly even. They were looking at them going, okay, monthly, you're going to true up. If you guys have problems, you're truing up with us. So that's kind of how you do it, right? You're managing. First of all, it's kind of like a Band-Aid, right? You're saying, yeah, I'm going to do it. And to your point, that's what's funny. The fact that people are telling you, I wouldn't do that, I wouldn't do that, I wouldn't do that. Why wouldn't you want to sell something that nobody else can sell and everybody's telling you I wouldn't want to do that? I mean, I did both, by the way. I did hard to place and simple.
The only way you can go from there is up. If you got somebody at 1.4, they're not going to be at 1.5 or 1.6. If you're doing your job right, you're likely going to improve their situation.
Right.
I mean,
right.
You got a hard to place risk. There's hard to place risk because it's hard to place and it's kind of different, but there's also hard to place because they've had some losses or they've had some situations. They've had some things that you can come in and clean up and put them in the right direction. And you're going to be a hero regardless because they're in a bad spot as it is.
Well, I'll tell you what we're working on right now, and only because I know most people won't be able to do it. And I'm okay telling you because other people hopefully watch the show and will know. But so we found, I've known for years tow trucks are horrible. Tow truck risks are horrible risks as a class, okay? And anybody that touches them knows they are.
Sorry about that.
Disappeared different. That's right. So anyway, we got a call early in the year and said, hey, there's an opportunity and a problem with group captive insurance on tow truck programs. And we're like, we don't do group captives. We do single parent captives. So we underwrite each risk individually, right? So our underwriters, our actuaries, they all do one risk at a time. We don't class underwrite. We could, but we don't. Like that's not the target market because we still feel, especially in today's world, a group captive, there's nothing wrong with it. But quite frankly, most people are looking to sell their businesses. 15 years ago, most people weren't looking to sell their businesses. So now you've got a different mindset on what's important to them. Is their loss ratio as important as getting the numbers down and their profit up? And so that's going to change how you are. It's just like if you're a fast growth company, your focus is on fast growth and you're not focusing on risk management. So you as a broker, you pay attention. So anyway, we got called on the tow truck thing. That's exactly what we're doing. We've had a bunch of tow trucks come to us in the Midwest and in certain areas that want to take control of their risk because they have plenty of cash, but nobody will insure them because they're tow trucks. And so we're putting together a program. And it's not even a program from us. It's by other brokers that are specialists in the space. And because it's so hard to place, they're taking the first chunk of risk. They're taking the lowest layer and they're taking the frequency. So what you're talking about with workers' comp, it's always the frequency. Severity is an issue that happens, right? And that's a cat risk, that's exposure, that's property. That makes sense. But but wheels, trucking, workers' comp, anything like that, it's frequency. So if the client is willing to take the frequency, it'll change their life. And of course, you get the ones that say, no, we don't have any claims. You're like, no, you do, but you aren't filing them. No, we're paying cash for them. Yeah, well, that's claims. No, but they're not claims. And I can't tell you how many conversations I've had like that in my life.
No, I hear you. So what just for the audience to understand, when you're talking to these tow truck operators that, and you're getting this program, these are not your traditional, these aren't insurance agents. These are tow truck operators coming to you.
No, we go through brokers. We don't go direct. We go through brokers. Okay. We never leave out. We never want to leave a broker out. Okay. We're not trying to replace.
They understood what you were getting at. Okay.
Yeah.
So, okay. So you're going through the retailer, but okay. So you're not going. Yeah. I got you. Making sure that.
No, we're not. We because first of all, it's look. I was a retailer. I know that risk better. Frontward fight. I'm never going to cut someone out. There's no reason to do that, and that's what's happening right now too in the insurtech space. And I think that's gonna fail as well. But.
Right, but typically in these situations, people usually they think about captive as like restrictive, but usually it's, more freedom than anything else. And, could you, and that's the way I look at it. Maybe I'm wrong in that, but, could you maybe explain that a little bit, break that down a little bit when you're talking about tow truck? You're talking about any kind of setting up a captive. It's not necessarily restrictive.
Yeah, so you'd have to have a couple things, right?
Yeah.
So first of all, it's really about that first layer. It's how much risk are you willing to take, and then it's about, is your premium enough to justify a carrier, a traditional carrier, still wanting to be on it because you need the rating and you need the filings and the regulations, right, for being in wheels and trucking. At the same time, if you have a large enough account, somebody will do it. If you have, too small of account, a traditional insurance carrier is not going to let you take that high of a deductible, which is really what you're putting in the captive. So, I mean, if you just equate the captive to a high deductible, you could still just say, I'm going to take a high deductible. But the reason why it's more beneficial is because you're literally showing them, yeah, we're not just going to react if there's a problem and pay a deductible. We're putting our money where our mouth is and saying, we want to pay close attention to this alongside of you. We want our internal risk management to match your TPA or your risk manager. So you're literally, you're making them have buy-in. So that's how it would work. But you go beyond that and you go, okay, it's really how much deductible you want to take and how much risk do you really want. If you're already going to take these, cash things that you're paying out, like I can't tell you how many times just in the last 6 months at tow truck shows, because we haven't gone to shows in years, and we went, and we now have a good stable of really successful brokers who have given us a lot of insight to help us build the model for them, to hopefully have success over the next 12 months that will help a lot of, not even a lot. We're looking, we don't look to take over the world. We want to help 15 to 20 truckers.
Okay, yeah.
We want to help 15 to 20. Like we're not, and that's the other reason why other people can't do it or won't do it, because we're talking about, $5 to $7 to $10 million in the world. It's nothing. And it just helps a few people, and they're happy, and they say thank you, and it's how you do it.
Sorry, I'm just over here just steady taking notes and stuff, because I just, I'm learning over here as we're talking, and I think what you're saying, you're dead on in so many things, and helping me to understand this as well. And so for you personally, transitioning from that and getting into, again, being that retail guy for so long, and like you said, you just morphed into that. What was that light bulb moment for you to say, wait a minute, this could be done a different way?
I mean, I don't think it was a light bulb moment in recent years. I remember a clear conversation with a very old good friend of mine, who was very involved. In fact, he's one of the original guys who became one of the original people that formed USI. Like there was 3 companies that formed USI years ago, and it was right in my backyard. And I'll never forget, we were both waiting for our cars. I ran the what they used to call the young agents. I guess they still call them the yaks or whatever, the young agents, whatever. I was running it up in the San Fernando Valley, and we were waiting for our cars after I finished an event that day, a luncheon for everybody. And he said to me, he goes, Jeff, stick in the hard to place and what nobody else wants to do. And it stuck with me because our firm was already doing that. Like my father-in-law was handling coffee pots, burns cases, and we were also doing the adult toy industry because it's the San Fernando Valley. I mean, it is what it is. You do what you do. So we're handling a lot of weird, and of course you go into one of those places and of course there's filming going on and there's other stuff. So you're like, now I'm insuring film and I probably shouldn't, but I am. And so, you find your way, but he's like, just do things that nobody wants to do and you'll always have something to do and make money. And that's really it. So nothing changed. What changed for me in 2018 is when I realized I was going to go back into insurance and to really figure out how to get my kids past where they need to go. I was like, I can't be in retail because I can't go to old clients and say, remember when I told you I had the best team? Well, now I have a new team that's better. I can't do that because I spent my whole career telling people how great the people around me were. But I tell anyone that's new in the business or looking. And in fact, I think I told a cyber guy too much yesterday. I had a cyber guy that's been chasing me for ITC for like months. I finally called him back, and I'm like, look, no offense, I think cyber is great, but nobody gives a crap. No broker cares. They're not going to give you 2 cents about it. They're not going to give you 2 minutes. I understand how important it is, but the broker, it's a, oh, by the way, I have to present this. It really, I said, there's some brokers that are taking it serious and focusing on large risks and going to data centers. I said, but the average guy is like, check, I make no commission. I got $200. Here you go. So like, I'm like, I go sell something because something that other people are paying attention to, that need emotion, it's not emotional, but wheels, trucking, workers' comp, nursing homes, professional liability, directors and officers, all that stuff's important in all directions. Nothing wrong with selling embedded insurance if you're going to sell a ton of it and keep doing it as a business. It makes sense.
But, and what you're saying, because a lot of people, again, traditionally think about, selling package policies or selling, a BOP or selling the home and the auto, whatever it might be, but a different approach, of what you're talking about would be maybe selling, the harder to place part of it, but that leaves the risk of leaving some of the other open for another broker to come in. And then you're sharing that relationship with some of the clients. How do you, navigate some of that, or how do your retail clients that you're working with, how are they navigating some of that? If they've got the trucking piece or they've got this piece or that, but yet some of the admitted or the easier to place stuff is with another broker.
Well, you shouldn't have it with them. You should take the whole thing.
Okay,
you should
so
be the guy.
You're having them take the whole thing, but your part of it is the harder to place stuff.
Yeah, my part is just I'm just here to.
I got you.
Look, I get we literally write very little business. I mean, we do. We write very little business, and I'm okay with that. We might talk to 250 brokers throughout the year, and we might write with 4 of them, and we might write 2 pieces of things. I mean, it's like and I'm okay with it because the things we write are so unique and have such great opportunity that we're good with it. We get programs, we get one-off accounts, we get whatever. But yeah, I mean, I learned a long time ago in my first agency, I realized I had to have, and this is what I did in 2003. I created a 330-page website, and I'll tell you why. It sounds ridiculous. I did it because I wanted, if somebody referred me business, because I'm a very much a referral-based broker. I was never a lead. I cold called one client, one prospect once in my life. I got the account. I hated every minute of it, and I never cold called again. Like, that's just the truth. I never, and I kept that client for 15 years. It's kind of sad. But I literally would tell you that I'm not a fan of that. I'm a fan of like white collar networking, just networking and engaging, and even with my competitors, because there's something a competitor doesn't do that you do, right? Sure. That's how you do it. And so I did it for years. That's also why I was involved in the insurance association. And to me, you spend all of your time doing that, and business is going to come in every direction. So you want when somebody refers something, you want to say, yes, I do. And so if somebody said, hey, can you insure a one-legged man with a cane for auto insurance? I'm like, yes, I can. And I wanted a page that had a one-legged man insurance, on it. And I wanted to be able to send them the link. And that's how I did it. And so to me, it's like you want to, and then I built a team when I became president of our company. I had an aviation partner. So we sent aircraft to them. I had, 2 personal lines department. I had high net worth and then our regular department. And you do it so that you can facilitate anyone, any type of ego, any type of simplicity. And I had $5,150 policies that needed to be serviced. And when you look at those guys, you're like, why do they need to be serviced? You're like, okay, this person's a personal trainer. I started a website called personaltrainerinsurance.com back in the 90s. And so they were paying $150, and people were like, why would you treat them so well? I'm like, well, they're paying $150. They make about 15 to 20 grand a year. That's like, pretty significant of their income. You think about it, right? Relative to the guy that's paying less than 1% for a $10 million company, they're paying $2,500, right? And then there's someone making 20 grand a year paying 150. So we had to put the right people in the right seats to do it. And people are like, you're losing money. And I'm like, yeah, but I'm choosing to do that because I'm going to make it up in volume. And I know that's silly, but we did. That's how you do it.
Yeah,
it was still a niche.
Sure, and that's the thing. I love that you brought that up, because I was just trying to figure out a way to work that in, because that's something I talk about on stages a lot, is building niches. I just spoke in North Carolina last week about this, and again, a great opportunity for a captive to come in and to be able to do some of those things. And so again, for you, that that niche, so to speak, is we want to say yes to whatever we can, but for other people that might say tow trucking or cannabis or hemp or whatever it might be. I think there's some big opportunity there. And from your perspective there, I know you're at a place now where you're not hunting new niches and new opportunities. They're more coming to you and you're fielding out where you want to go there. But for a retail broker or for even a carrier or for, someone listening to this podcast that's thinking, niche focused, and where do I start? What do I do? Um, is there advice there, or is there things that you could talk about there from your perspective on, I know from where I come from, but you're thinking way bigger. You're on a whole nother level than I am when I'm thinking about niches. But one of the things I do say to lead into what you've been talking about is, I'll tell people as you're walking through, thinking through what is your, ideal client look like? What do they not look like? Those kind of things at a high level for the more your retail brokers. But then I do get into example that I had when I was an agent of, when I owned an agency. It was like, I wanted to find those accounts with hair on them, or I wanted those accounts that had audit issues. I wanted some of those. And people look at me even from stage and they're looking at me like, why would you want an account like that? Kind of go back to what we talked about. But again, I go back to, because that means that they've got a pain point. They've got an issue. They've got something you've got to solve for them. But again, I say all that to say, is there some things that you could add to that conversation of like, if someone is thinking about a niche or thinking about that and setting up a captive, what's some advice you would give? What are some things that you could say to those agents right now, or those carriers, or those tech companies?
So here's what I would say. So first of all, I wouldn't even start a conversation about a captive yet. I would let's address your first part. I think retail agents. I think I love the passion that's coming out of young agents. And I'm an old guy now. I'm only 56, but now I'm an old guy. Like when I started, 70 was the average age. So all of a sudden, I'm an old guy at 56. Because everyone's in their 20s or 30s, and 40s. I think you're close. You're almost there. Oh. But with that said, I have a lot of people approach me and say, I got to start this program, and I go to the gym all the time, or I ride bikes all the time, and I want to start a bike program, and I want to insure bikes and whatever. And can you give us the paper for that? And we want to form a captive, and we want to do this. And I said, look, okay. First of all, you have to have at least $650,000 in premium before you want to think about a captive, because the costs are not worth the thing. Now, if you want to do it, and I see the value, we'll put our own paper and take 100% of the risk and give you commission, and then give you a chance to grow and do whatever. So we're happy to do that. Right? We do that we offer that all the time. But with that said, the other side of that is I spend a lot of my time trying to convince them not to focus so much on having their own product. I'm like, there is so much great automated product out there that, to me, a retailer that's looking to create a niche should build their own portal, their own website that goes in different directions with different, basically, names or links. It's not even about the website domain. It's more about how are they going to move traffic to there, and where are they going to be. So if you're looking to sell bike insurance and you love to bike, go to the bike places. Go to the communities that have biking events. Go to the communities that have biking clubs. Go to the community. Like, that's where you find it. But don't sit there and say, I got to build the program first, and I got to create the product, and no, you just have to put yourself out there. And when you're there, you're like, yeah, go to my website. Nobody cares that you have it through Markel. Nobody cares that you have it through Next. Nobody cares that you have it through Hippo. Nobody cares. The client doesn't give two craps or two shits about why you're doing it. They don't care that you don't have.
They care about Heath. They care about the named agent.
They care that you're like if you say, like, if you're talking in that language to them, you're like, oh yeah, I love the $20,000 XYZ bike. They're like, you're in, right? Like, just become that niche. I hear so many people that tell me, well, I have to have this, and I punch people in the face like constantly. And my friend, Adam, who's my right guy, is also a friend, but he's been my right guy now for 5 years. Right hand guy. He's like, man, I was setting the guy up at ITC, and we're talking to him, and we thought you should come talk to him. And I go talk to the guy who's got a little booth at ITC, and he starts telling me what he's going to do. And I'm like, it's not going to work. You shouldn't do it. You should just focus on this. No, but we're going to do this. And I tell him to their face, and and then I walk away because I just can't handle stupidity. And I'm like, I'm sorry, I've been there. I did it. I failed. I'm telling you. I'm not telling you because it's my opinion. I'm telling you factually, here's your hurdles, right? The CPA is not going to sell your insurance if you're trying to sell audit insurance. The other person is not going to sell this if you're trying to do this. Like if you're trying to tell them, yeah, we're gonna insure against us doing something wrong. So here, will you pay more premium, Mr. Client? No, it's not going to happen. So you gotta just. But there's a product over here that you can go get that's already been packaged. Go sell it to whoever is going to buy it. That's what I would do. I'm a big fan of young brokers. Young agents. I just think it's hard though because a lot of them, again, depending on if they work for a big house or a little house, their limitations and how much they don't get paid commission and what gets penalized. Like when I grew our agency, with the resources I had behind me, that wasn't mine. My father-in-law backed me, and then we got some loans and we all signed on for some funding and did some other things. I couldn't just penalize the guys that had been there forever and say, okay, now you don't get your same commission. Like we're going to start scaling you down. You just can't do that.
Right.
But it's done every day now.
Yeah. And the other thing, golly, okay, I'm looking at time here, but there's so many questions.
Sorry.
But one of the things, a conversation that I've been having for several years now, that I still think is relevant. The conversation that we had, maybe it started ITC for me the first time I heard the conversation, but, the example of if you have a headache, you don't go to a podiatrist. If you have, foot problems, you don't go to a cardiologist. If you have cancer, you don't go see, your general doctor. You have to go to a specialist, in those kind of medical areas. If you want, a brand new car, you go to this lot, not a used lot, whatever it might be. And in insurance, there's that conversation that people say of, do we see a future where there is, people are more going to specialists in that arena, and we'll see a day where, if you have, if you're, I don't know, a tow truck operator, you don't go to a generalist. You only go to these 5 or 6 brokers that do tow truck insurance. If you have an airplane or you're, in the aviation space, you only go to this broker that does aviation. Do you, see where that conversation could go somewhere and there's some legs there? Or are we always going to have, the same things we've had forever and the generalists that, will piecemeal some stuff and then write some stuff? Or are you going to see a day where we're more operated by specialists and niches and things of that nature?
I've lived most of my adult business life with going to the right specialists in each direction. I went to, CRC when it was Sweat and Crawford. I went to Sweat and Crawford for my layered professional liability. Could I have gotten appointments from, could I have gone to Fireman's Fund and written one layer or whatever? Yeah. Could I have gotten 15% commission versus 10% going to Sweat and Crawford? Yeah. But ease of doing business and trustworthy, and they know it. I guess I look at some of the things like 180 Intermediaries, for example, which is part of Risk Strategies, which just sold out. Okay. They've done a great job putting, and I've never used them and I've nothing to do with them. I barely know Martin who ran it, but they acquired all these great people. So one of them was my aviation guy. One of them was my health friend. One of them was my film and TV guy. So they actually picked all the people that I worked with. They kind of cobbled together. So it's kind of funny. And Aon as a retail broker back in the early 2000s had a thing called the Aon Specialty Products Network, Aspen, and they did the same thing. So I think that already exists. I think the hard part is that a retail broker has to still have the ability to go deep and wide, because it really comes down to how you're going to be getting referrals. And to answer your question, from the tow truck shows that I've been to now, which are forward-facing retail end user tow truck shows, most of the people I met are using a specific group of tow truck operators. Now, those same tow truck operators, absolutely, some of them are doing real estate because they have to, right? Because they're really like the quarterback, right? They're like, okay, all right, Mr. Tow Truck Operator, what do? You own tow truck lots. You have a bunch of cash, so you're investing in all these different other businesses that have nothing to do with tow trucks. You have fleets, and then you buy a bunch of old classic cars. So we've got to have a good personal lines Haggerty thing, right? So like so that's, I mean, that's kind of how I built my company, like that.
I hear you. Now, no, and I think you're right, and I just like the conversations. I think it's interesting to have, and I think that, again, am I here to say that generalists are going to go away? No, I think there's still going to be a place for the generalist agency or the lifestyle agency or whatever, however you want to look at that. And I think that's great. If there's an agency right now that listens, and I know there's a lot of them that do, that they'll take those risks, whatever, and they'll go deep and wide in all the everyday life, but I do see a value in agencies having at least one or two specialties in their agency, whether it's, personal lines, you want to write all high value homes, you'll take the other ones, but you want to specialize in high value, or a commercial agency that writes a lot of commercial, but they just happen to have a niche in tow trucks or in trucking or in cannabis or in HVAC contractors, whatever it might be. But I think that's an interesting conversation that's out there. The other conversation I had last week was, I heard some people talking from the carrier side that were, just because of how difficult it is right now to write certain things, especially on the property side of, they were talking about that Lloyd's of London model, where if you've been through there and you'll see, this desk, okay, could you take the first 25,000? Or could you take the first 5 million? Could you take that million? You're laughing, but
well, I'll tell you why in a second. Go ahead.
Go ahead. No, I want you to go ahead.
I'm laughing because you could probably go back and look at a half a dozen podcasts I've been on going back the last 10 years. And I've had that conversation every single time that we need a Lloyd's of London style property casualty. It's the only way we're going to fix the market. And I've said it, and people look at me like I'm an alien. I'm like, no, you don't understand. And they're like, well, they're charging 3 times as much. I go, great, but they're still not making money because you're literally doing, you're taking a full swath on a bunch of risks. It's funny because Nick Lamparelli and I, going back 10 years ago, probably close to 10 years ago, he learned my background. I have a very, what I didn't tell you is my high net worth background is very, very, very strong. I insured about 3,000 truly high net worth people. I insured some of the largest single family home compounds in the country. And actually the product I created ended up on, I didn't do it, but it's the product we created, ended up on the Newport, or the Newport, Rhode Island homes, all those mansions. But I insured a lot of the first sustainable houses and stuff, and $200-300 million worth of property here, just one house, like one compound for a family. And being in a wildfire, earthquake, and whatever, we did a lot. And I used to sit there with my laptop on weekends watching the Malibu fires and have, clients call me and say, hey, our caretakers at this house and they're hosing it down, and, and AIG's out there with their truck. But my point is, wildfires are always going to exist. They're getting worse, right? They're not going to change. So Nick and I, this is the craziest thing. It's so funny. So Nick called me and he said, I think, and I won't tell you which carrier, but he goes, I think these guys, overseas are going to be involved if we do one property in each location. This is almost 10 years ago. This was our plan. And so he goes, can you get, some underwriting data? So because I happen to have a really strong company in the past that had a bunch of high net worth, all of those old employees were now at different places because about a few years after I left, they ended up at different places. And so I called a few of them, and I ended up gathering $1 billion worth of TIV in about 2 days. And I submitted it to Nick, and we basically submitted it over to, them overseas. And they set up a call with us to do what we were going to do. We were going to insure property one-off, like all throughout California, like every bunch of miles, we were going to do it and have about $1 billion in the first tranche. And 2 weeks go by. We end up having the call set up. We get on this Zoom call. It's like Nick and me and like 4 or 5 other squares of foreign people, like Italy, Germany, like all these different people, right? I kid you not, California is burning like you wouldn't believe. Like, you can ask Nick this story. It was crazy. California is like on fire in every direction. And I'm sitting there trying to sell them on starting a high net worth insurance program for high net worth homes. And it was the craziest. And they're like, look, guys, we get what you're doing because it made sense because we were going to insure like parametric style, one home at a time.
Right.
But yeah, I mean, I think you can only do it with Lloyd's. You can only do it with what with a Lloyd's mentality, not even with one carrier. So, but you're also never going to get enough people to agree to do it, except for like with ILS and stuff like that they're doing. And I still haven't gotten my hands around ILS because I think that's more of just like rolling the dice and throwing money into something. But that's,
Sure.
but I'd take their money if we could do it. If they said to me, hey, we'll build an ILS platform based on your head, I'd be like, I think we could pull it off. It makes sense. But
right now, the last question I want to get into, this could be a longer conversation. We may have to just have this one off air again, but with AI and Gen AI and all of the stuff that's coming out right now, it's obviously, first of all, people are tired of talking about it already. However, it's not going anywhere, and it's gonna continue to affect our space for a long time, no matter how they try to regulate it or how many times they try to do this or that to it. But for you and what you're doing, do you feel like it's going to be a threat to what we're doing, or it's going to be just an aid for you to help you do better? Or are more agencies going to say, oh, I can do it on my own now. I can just set up a chat GPT and just type this in and figure out how to do it and it'll be done? Or like, where do you see AI affecting the hard to place risk and that kind of stuff? Setting up captives and all the things.
no, I mean, I don't. That's a tough question. I think AI to me, at least from what I understand and how it'll play a role in this, is it's a faster way to get to an answer. Okay. The problem is that the data in and data out has to be good enough data to for someone like me who it's my pocket, it's my money that I'm putting up. I have to feel comfortable that the data is the good data, and someone can tell me that till they're blue in the face because ChatGPT or something told me it was right, and I'm like, great, but I'm still concerned because I saw that house burn the other day. Like it would have to be that type of stuff. Now, where I see it real valuable, and I'm actually backing some stuff, and I'm actually in fact I just had this conversation with a new AI claims company that's doing some stuff. I said when you go focus with people to sell what you're doing, forget about it as AI. Just tell them you have a way to get the data they need, facilitate to make real instant claims handling decisions based on data that's normally going to be out there that we would have to go through. I said, I understand it's more than that, and I don't want to offend, but I'm just telling you factually, that's what you need to focus on. Like, I don't care. I mean, one of my close friends literally was on the IBM Watson, which was the thing that beat that beat Jeopardy or whatever, or beat one of the games. Very first thing from 2010. He's on the team. Neil Sahota. He wrote a book called AI, like going back 10 years ago. And Neil told me back then we were trying to train a chatbot to sell wedding insurance. And he's like, Jeff, it's in your corpus. Now I know AI has taken on a life of its own, and I get it. And it fascinates me, and I'm having a ball creating pictures, by the way. But it does fascinate me. But I think for us, there's still going to be a need for somebody to communicate to the end user client that needs it, how they got to the answer. And there's still going to be a need for someone like me to make a decision with my partners on whether we take risk or not. And so even if the data is all there and someone's till they're blue in the face showing me that it is, I still have to make a decision. Is that a good use of my dollars? And I think everyone else is going to have to do that. I think look, I think here's the sad truth. I think the biggest insurers in the world are now not doing insurance. They're investing in technology, and they make more money doing that their capacity for insuring things is going away more so than AI giving them solutions.
Wow. Well, yeah. And I think because of what you can do with large sets of data, you can put these data sets and, create these data lakes, do all these things and put that into an AI, whatever it might be, whichever one you use, or if you have your own in-house generative AI or whatever it might be, your AI tools, you can be able to process a lot of that data and make, like you said, those instant decisions, not instant, but you can make decisions a lot faster that way. And you don't have to have an actuarial degree from MIT or anything like that. You can be able to sit down and say, okay, based on the entire coast of California is on fire, or the entire whatever, going on, we can make a decision based on past data, present, what we predict for the future. There's just, I don't know, I see so many use cases there. I agree with you though, that I think that there still has to be a human being, a human in the loop, as as they say. I just wonder, is it going to create some cowboys out there? It's like, hey, I can do this. I've got AI, behind me, and I
But
can make these decisions just like Jeff can. I don't have to have 30 years experience. I just need to have ChatGPT, or I just need to have Watson.
I think, yeah, I think it's look. I think it's 100%. And by the way, if it was me and I had really deep pockets, I'd make two decisions. I train something over to the right, and I do what I do to the left, and see which one works out over 3 to 5 years. I'm not saying no. I agree 100%. We make decisions. Look, we get approached all the time with something that may be an awesome premium. That as a retail broker, I'd be like, holy crap! I wish I had this year. Like it's crazy. But then when we look at the numbers and we look at the risk that we're taking, and we look at the other features of it, like, no. And they're like, what do you mean? It's a great risk. And I'm like, no, it's just, we can't afford it. Like, we can't afford a $10 million hit. We can't afford, we can afford $1 million hit. We can afford $1 million hits. We can't afford a $10 million hit. And we can't afford it if it's like a parametric trigger where it's like, the cat in the circle, right? It's this house. If I'm on the hook, like I've been asked to be on a layer of something that was like $80 million. And they asked us to be like on $2 million of it at the 80 millionth thing. It's in the middle of like fire zone like 26. Like it's like you're gonna be sitting there watching the fire come, and they're like, yeah, but the building should be okay. I'm like, yeah, but that's the problem. Like, right. You're right, but for me to collect 200 grand against $2 million doesn't make sense to me. Right. I'd rather go do it over here. So yeah, no, I'm all in on AI. I love what's going on. Yeah. It scares me, but I love it, and I think but to me, it's about, it's just like they said, just like no broker's going to be around. It's all going to be, automated. It's all right. There's still going to be a need. Now, do I believe that there's going to be 3 or 4 day work weeks for the guys that are younger than us? Yeah. Do I hope it actually, they still get to get paid like they got paid, and they get to eat like we get to eat? Because that scares me more than anything, like if you're, that's more of a concern for me as a dad than anything.
100%. Yeah, that's a good point. That's a whole nother conversation as well. So you and I, we've been talking, we've got ITC coming up, in a little while. And so we're going to be there for that, and, going for 2 different reasons, I would imagine. But, for ITC for you, I mean, just high level in 30 seconds or so, like, what are you looking for at ITC? What ITC, for those that may not know, is InsurTech Connect. It's in Vegas. 10,000 or more people will be running around in a trade show looking at all this cool shiny new tech. But what does someone like you go there for? What are you looking for?
I mean, look, I know you don't think I hustle, and I'm like done selling stuff, but I'm hustling. I'm hustling, man. I mean, we go and look for new prospects. We hope we find, every so often we like to find an insurtech that needs some help from us. Maybe they need some paper from us. Maybe they want us to, add value to be able to become a reinsurer for them if they have a scalable enough business. And to us, it doesn't have to start out big. It just has to. We can't have a big loss. Like if they're going to get 100 grand in premium and it's going to be $1 million claim, we can't do it. If it's going to be, like the phone guys made sense, $400 phones. So we go look for, things like that. We go and we meet with a lot of our old relationships. Then we go to target markets 3 days later, and we go meet with those relationships. But at ITC, I've just been going for so long. I've been in the, I've seen Tony, Bob Frady, Nick Lamparelli. Like, these are all my friends. I've got great stories with all of them, and so it's a good chance to connect. And they always went, out of sight, out of mind. So it's better to be seen. And so we don't really stack the deck with meetings. We walk around and we kind of grab things along the way. We grab connections and engagements and try to grab a few minutes here and there to re-up our relationships. And then we see existing clients there as well.
Awesome. So for those that are listening to this podcast, and that may want to connect with you, what would be, a way they could? Would that be a LinkedIn? Would that be an email address? Would that be, carrier pigeon? Like, what's the best way to find you?
LinkedIn is the best. My email, I'll tell you my email is jdkleid@eliterisk.com. You can, I don't know if you put it there or something, but yeah, I would just tell somebody if they're reaching out to me, I get a lot of requests for LinkedIn like we all do. If someone tells me how great they're going to be and how they're going to help me do something, I don't really at them. But, if someone just reaches out and said, hey, I'd love to meet you. I'd love to get a few minutes or tell me, I'm happy to do it. And I'm happy to guide anybody. I love, quite frankly, I love telling people no. I love talking to them to talk them out of stopping what they're doing to go all in on something until they know it's actually the right direction. Right. I'd rather test the waters.
But you're going to be real with people. And that's the thing that I like the most about you. And I remember, the first time we ever spoke, we sat there for like a good hour, just shooting the breeze and talking and, again, sharing stories and insights. And I think, you have that genuine nature about you. And so that's why I bring that up. If people want to pitch you anything, that's not what I'm telling people to do, but they just want to connect and just talk to a guy that's been around a while and get some advice and whatnot. I think that'd be cool.
And if they want to pitch their thing, they're looking for paper or something, I'm happy to help. But if they want to sell us something, no.
Right. No, I hear you. I just appreciate you hanging out, and I barely even got to scratch the surface of what I wanted to get into, but you and I always have, good conversations, so I appreciate it. I thank you for hanging out in Insurance Town with me. I think this is going to be a fun episode. I think we're getting a lot of good comments out of this one. So again, thank you for hanging out. I'll see you.
Yeah, of course. I look forward to seeing you. Hopefully we'll make some time out there in ITC. I want to hang out.
We definitely have to find some time for sure. I'll be out there Tuesday or Wednesday, Thursday. I'll be out there the whole thing. I'll be doing ITC agents. I'll be speaking at that, and I'll be running around like a chicken with my head cut off the rest of the time.
Yeah, we're actually going out there Monday, so we don't have to go out Monday afternoon.
So awesome. We'll definitely catch up. Again, I appreciate you so much.
All right.